on How Green Are Green Bonds, a deep dive into market standards and implications for investors. I'm Mary Leung, CFA, Head Advocacy for CFA Institute in Asia Pacific. I'll be your host and panel moderator today. Before we start, a few housekeeping notes. Today's webinar is scheduled for 60 minutes, including questions and answers. The first part of today's webinar will be a short presentation by Cedric Remold, CFA Climate Bonds Initiative. He will be taking us through the latest developments in the green bonds market and the relevant standards that govern them. After that, we will have a panel discussion with market experts in the region. All participants will be muted to minimize background noise and interference. We'll be running a few polling questions and you will be prompted to submit your answers. And we look forward to your participation. We welcome comments and questions via the Q&A chat box on your screen. There will be plenty of time for questions, so please keep them coming. This webinar will be recorded and be available to view after the presentation concludes today. And the presentation and the recording will be uploaded onto the CFA Institute Asia Pacific Research Exchange. Now, I'm going to give you a quick introduction for Cedric, for those of you who haven't met him. He's the ASEAN Program Manager for Climate Bonds Initiative. He's well versed in all things green, but not only that, he's also a credit specialist. He's been a seasoned credit analyst, a trader, a fixed income portfolio manager, and with an area of expertise in emerging market high yield. Now, so you have had the chance to know about Cedric. Let's turn our attention to you. You are a key part of our today's webinar, and we would like to find out who you are. And here with that, we have a poll. So we've got 55 people who voted, and we'd just like to know a little bit more about your professional capacity. Are you an investment professional, a research analyst, a wealth manager, private banker, or financial advisor, a ratings provider, account preparer, or a corporate strategy treasurer, or academic student? Now, it seems like a few of you have already voted, but I'm going to relaunch the polling so that we have captured all the new participants that have joined in the last few minutes. So please cast your votes again. Thank you. Huh? Okay. So I like the fact that attendees are still voting. I'm seeing the voting count go up. Now 70% have voted, and I'm going to end the polling here and show the results. It seems today we have most of our audience, almost a third of our audience, almost 30% of our audience are investment professionals, followed by mysterious others, and we have some researchers, analysts, as well as academics and students. So thank you for sharing. Now I'm going to hand over to Cedric, who's going to take us through the green bond market development as well as green bond standards.
Thank you, Mary. It's a pleasure to meet you all remotely. So let me flip through the next slide. So the green bond market has seen a very strong growth since its early days in 2014, when we got new standards in the market from the International Capital Markets Association. And yet, last year, the total amount of green bonds issued globally reached more than $250 billion, which means that today we have more than $850 billion of green bonds outstanding. And we are on track to reach 1 trillion, which would be 1% of the global size of the bond market outstanding globally. So this is a very strong growth. And this is, for example, bigger than the convertible bond market, which I'm sure a few of you are quite familiar with. This growth has been very strong in all parts of the world, but in particular in Europe and in Asia Pacific, as well as North America. Africa has not seen a huge amount of issuance, but there are very strong signs that this growth is going to continue. And in the COVID-19 crisis, where we have seen a stop of bond issuance globally in March, we've seen equally a drop in the issuance of green bonds. However, in April, we've already seen signs of issuers coming back to markets. And also there has been some comments that the green bond market itself has outperformed in terms of performance during this crisis, which is quite interesting. And we've seen, for example, a major transaction in Europe by Iberdrola, which was 14 times oversubscribed in the primary market. So this is a very strong sign that investors are still looking to invest in green bonds. Let's focus now on the ASEAN region. The growth has been also very strong, and in 2019, we've reached $8.1 billion of bonds outstanding, which is a very strong growth year on year, about 100% of growth. And we see some significant amounts have been issued, first of all in Singapore, where green loans dominate green bonds, and especially in the real estate sector. We've also seen strong issuance in the Philippines, in particular from corporates, from the energy sector, from the building sector. In Indonesia, there has been the noticeable issuance of 2 sovereign issues, 2 green sukuk, which the government has used to raise funds to go towards green projects, as well as some issuance from financial institutions to reach a total amount of $2.9 billion. In Thailand, in 2019, the amount of outstandings reached almost $1 billion as well, with some issues in local currency, with issuance coming from various sectors, in particular renewable energy, as well as transportation. There is a great diversity in the ASEAN market. There is quite a high percentage of the green bonds issued that are in local currency, as much as 41% in 2019. And there is a diversity in instruments. For example, in Malaysia, with 1.34 billion of bonds outstanding, there is a dominance of green sukuk, in particular from corporates. In the Philippines, we've seen SC Energy issue a perpetual deal, which is quite interesting as well. So we have seen the sovereign issuance out of Indonesia, and we've seen in Vietnam, some local municipality as well issue some small deal for water projects. So this is very encouraging. This diversity is a sign that the market is maturing, that there's interest across the board in various sectors. We expect this growth to continue. We are hearing a lot of signs that many projects are in the preparation stage. So that's very encouraging. I think the market is already well equipped with some standards. In terms of the types of entities that are looking to issue green bonds, so far we've seen sovereign issuers, like I said, non-financial corporates and financial corporates dominate. And we expect that to continue. Initially, this market was dominated by development banks and international entities like IFC or ADB, but this is changing now, and we have private entities that are coming to use these instruments to raise financing. So we, in terms of how the market is structured, we have the market standards that were originally issued by the International Capital Markets Association. These standards come in different flavors. We have the green bond principles, but we also have the social bond principles and the sustainability bond guidelines as well. Basically, these standards are organized on 4 different pillars. The first one is what is the use of proceeds of the green bonds. The second one is what is the process for project evaluation and selection. The third pillar is how are those proceeds managed. And fourth one, what is the reporting on the use of those proceeds. So this market standards forces issuers to really be more transparent with investors on what these green bonds will be used for, or those social bonds will be used for. And that's increasing the transparency and the disclosure And in general, that's something that investors like. We have conducted a survey in Europe among the top investors, and they are telling us in a very high majority that they like stricter standards and better disclosure from issuers. So that's why this is very important, that this market is built on solid foundation, which has those market standards. Building on those green bond principles, the Climate Bonds Initiative has developed a certification scheme, which is an extra level of disclosure and requirements from the issuers to be able to call the green bonds climate bonds. This process is similar and is built on the green bond principles. So the issuer must first prepare the bond by identifying the assets that meet the relevant sector criteria. We have developed a taxonomy by sector, which gives guidelines on what types of projects are eligible. Secondly, the issuer must engage a verifier. And after that, the verifier will issue a report explaining all the relevant information on what are the projects that are selected. And based on this report, the Climate Bonds Initiative will give a certification on those bonds. And with that certification, issuers can give assurance to investors that the bonds are truly aligned with the objectives of the Paris Agreement. Fourth, there is a requirement to confirm this certification after the bonds have been issued through a post-issuance certification. And finally, every year after that, until the maturity of the bond, the issuer must report on the use of the proceeds and how those projects are progressing, which is very important as well. So green bonds, more generally, are a very good tool for issuers to develop a strategy that is respectful of the environment and respectful of ESG criteria, and also relates to the United Nations SDGs. So climate adaptation, clean water and sanitation, affordable and clean energy, innovation and infrastructure, sustainable cities and communities, life on land, etc. So this is part of a broader move that we see from investors to request that issuers of fixed income securities provide more guidance on their alignment with a broader sustainable agenda. So to summarize, this green bond is very exciting. There's a lot of things going on. It's grounded in some standards that are already well recognized by the market that come in different flavors. We are going to talk about it in this webinar. And that involves several stakeholders, including issuers, underwriters, verifiers, investors, and also I guess, investors in various shapes and forms. But I'll turn back to you, Mary, and we'll get to ask more questions about this.
Excellent. Thank you, Cedric, for a most informative presentation. I know many of you have questions for Cedric and maybe later for the team. Please submit them on the Q&A box. We'll leave time for questions later. Now, moving on to the panel, in addition to Cedric, we have two distinguished and very accomplished panelists with us today. Juliet Macrisy, CFA, Head of Greater China and Southeast Asia at Vigeo Eiris, a multinational ESG research and services provider, and Yoonmee Jeong, CFA, Sustainable Finance in OCBC Bank. They're very well plugged into the green finance market in Asia. They've worked on a number of landmark deals and have helped issuers raise funding that goes towards sustainable projects. So between them, they're going to share with us some very interesting market insights. Further details of their expertise are on the registration site, so please go and check that out. Now, I apologize, I didn't actually manage to share the results of the last poll, but now I'm hoping that you can see the results of the first poll. So as I said, about 30% of our audience today seems to appear to be investment professionals, followed by mysterious others, and we have quite a few research analysts as well as academics. So welcome again. I'm now going to launch a second poll. So the second polling question today is about the pandemic and what it's going to do, how it's going to affect the green asset, the trend of green assets. So the trend towards green assets was reasonably strong before the pandemic. How will the pandemic change that? Yes, because there will be more cheap assets to choose from. So, people may not want green anymore. Yes, because the march towards sustainability will either slow or be derailed. No, life will be back to normal pretty soon. And hopefully this will be my last webinar. So you will have a few more seconds to vote. Please cast your votes. Now, ASEAN has enjoyed strong economic growth in the last couple of decades and has benefited from significant foreign direct investments. So, how is its economic fortunes going to hold up? There may be a... Okay, so I think we've got quite a few people voted already. So maybe the last 5 seconds. Okay, I'm going to end polling here. It looks like we have most people thinking that the pandemic would indeed change the trend towards green assets, because what we're experiencing will slow our common goal of sustainability. Well, this is certainly not what we want to hear, but we can understand where you're coming from. Now, as I was saying, climate change is the defining issue of our lives. And the Asia Development Bank has estimated that Southeast Asia will feel the brunt of this economic impact, pushing an additional 75 million people into poverty. And this will come with an 11% drop in GDP. And this will be as a result of damages to agriculture, tourism, and fishing, and not to mention human health and labor productivity. So how do we deal with the physical and transition risks brought about by climate change? And, if we have a pandemic like this in the background, how do we make sure that we invest enough to transition to a low carbon economy, and how does green finance come in? So Cedric, you were actually presenting a very optimistic picture. In your charts, the pandemic's effect on the green bond markets were transient. So, but the audience thinks otherwise. So do you want to elaborate on that?
Well, I mean, we hear a lot of green bonds getting ready for issuance. So that's why I'm saying that I'm hopeful that this market will recover. But what we also see is a strong interest for sustainability bonds and loans. And maybe Yoonmee can confirm that. But in Southeast Asia, I think there is a strong interest for securities that combine green and social as well. So that's probably why the audience also think that and the other thing that is new as well is the pandemic bonds that have been issued recently in reaction to the crisis. So probably it's a bit confusing as well as to what's really going on. But when we speak to experts, what we are hearing is that this interest from investors and from issuers remains strong for green bonds.
Great. Yoonmee, do you have additional thoughts that you can share?
Sure. Thank you for having me, Mary and CFA. So can you hear me well, by the way? I just want to make sure. Okay, lovely. So I guess whether it's green or not, it's true that the bond market, at least in Singapore, has been very slow for the last few weeks. So for example, in Singapore, total bond issuance was 5.7 billion this year, YTD, which is a roughly 60% drop year on year. So the market has been quite slow. And green bond, before it's green, it's a bond. So it will be affected by the market situation. But what I want to highlight here is when it comes to the green activities, so at least at OCBC, we do not see much of a slowdown in terms of the client engagement in potential green financing discussions. As Cedric was saying, some people are taking this opportunity to prepare for that potential deals as well. So as you might have noticed, we just announced 2 green loans, one with GoCo Land and Manulife just this week as well. So as you can see, we really continue to engage our clients with the green finance. And for many business, I do agree that this situation is very hard and urgent priority might change, but integration in integration of the sustainability into the business has been already happening in many markets, in many industries. So I don't think anybody will take this opportunity to say, hey, I'm not going to look into sustainability anymore. And actually integrating sustainability into your business strategy, at least from my view, it means that you are having a forward-looking long-term perspective in designing your strategy. It means you are improving your governance and transparency of your business, and also you are having more proactive management of your partners and a wider stakeholders, including supply chain as well. So all in all, I think this crisis has actually made us realize the importance of those issues, and the importance of also making business more resilient. And so I'm hoping that this agenda continue. But I do agree with most of the audience that urgent priority might shift. There could be some slowness and a little bit of changes in order, but the direction is there and the trend is really there.
Okay, thank you for that vote of confidence. So obviously, hopefully investors will continue. Oh, can you hear me? So investors want to allocate funds to projects that would mitigate climate change risks, and they need frameworks and standards to evaluate these projects and instruments. Now, Cedric was talking about sukuks and loans and bonds and with diversity of issuers. But when it comes to green, it doesn't feel like we have a common language. And someone has said that being green is like the modern day Tower of Babel, when everyone is talking a different language. But when there's demand, there's supply. So there are actually quite a few standards out there. There are international standards such as the Green Bond Principles. There are regional standards and national standards. Now, my next polling question is about standards. So, should there be one set of international rules for green bonds, or should each country have their own? The first answer, the first choice, convergence. We don't have enough paper in the world to write down all the different rules. Or is it the fact that each country is different, so it only makes sense for the rules to be different? Or maybe somewhere in between. So that's a hedged answer. Please keep your votes coming in. So a few more seconds and I'm going to end polling. So most of you have selected somewhere in between, but a sizable portion of our audience actually thinks convergence is the name of the day. Now, the EU and China have issued green standards. And so one of the issues that we're all trying to grapple with is that every country is different. So for example, if you look at some of the largest countries in Asia Pacific, like China and India, they're very reliant on coal. But in the EU, they're less reliant on coal. So should standards take account for that? And that's maybe why they are national and regional standards. Closer to home, the Asean Capital Markets Forum is working to harmonize standards and regulations around green finance. So when that's done, we'll have a complete set of standards in line with international ones. And that will accelerate development across Southeast Asia. So my next question is to Juliet. Are investors coalescing around one standard, or is there still a lot of debate as to which standard is the one to go for? And if they are, what are the key features that investors like?
Okay, thanks Mary for this question, and good afternoon everybody. I'm really happy to represent Visual Iris for doing this webinar. So there's no, as you see, of course, investor got different investment strategies. So this is the little bit question, same question that for for a lot of other topics such as data and so on. You will not be pleasing everybody by having only one standard or one data to look at. So the general view that we were observing by discussing with investor is like, and that to help investor is like standards needs to have common grounds, and that the convergence of the standard is more a question about maturity of the market. green bond market, as explained by Cedric, is a new market. So if you are too stringent from the beginning, you make it itself a market. The market is organizing by itself, but it needs to have common grounds for comparability and for transparency. This is key words. This is really key in terms of when you speak about green, social, or sustainability bonds. And it's what it's about. Standards are important. They have to help to achieve this goal about transparency and comparability. So when you look at a standard as of this is today for investor, as you mentioned, there's really the common grounds are the ICMA Green Bond Principle and Social Bond Principle or Sustainability Bonds Guideline as have been presented by Cedric. This is really what we say the common grounds, and even if some national standards are still far from that, I think there's definitely a willingness for most of the regulators to converge, or at least to be able to have comparability between their local national standard and these international standards. So the use, so how the investor should look at standards and use standards. So basically the use of specific standard is decided by the issuer at the time of the issuance. And what is important to note is like what really the issuer wants to achieve via his green bond issuance, what standards are the closest to his goal, his sustainable strategy, and will help the issuer at the end of the day to clearly communicate on its first overall sustainable strategy and what will be the objective of his green bond issuance. So this is the first question. The second question is like to make life easier, of course, for investor, is what you are targeting in terms of investor. Is it local national investor? Is it international investor? Again, there's not the same maturity from investor side. There's not even the same requirements. So depending on, I think the first basic thing to look at is like what standards are eligible under your jurisdictions. So when you go to the market as an issuer, what will be the first, the investor, the local investor will refer to their jurisdiction. So first, to comply with at least your standards and your jurisdiction. Then of course, if you like you've got a more global outreach in terms of investor, looking at other standards or more maybe sophisticated one could be seen as a best practice and be really seen positively. But again, if we think about, this is the view that we have, that most of them are linked really to the ICMA Green Bond Principle. If we speak about green bonds, it's wide enough to be able to be adapted to most of the jurisdiction and most of the issuance. As you know, there are guidelines on the 4 pillars that have to be followed and that have to be aligned. So this is definitely the role of external verifier, such as Visual Iris, to help and to clarify and communicate to investor on the overall contribution of sustainability of the green bond, but as well on the alignment to the standards and to the 4 pillars of the standard. And this is common to most of the green bonds that have been issued so far. So it helps comparability as well for investor.
Mary, if I can also add something to what Juliette is saying, I see a couple of questions coming in, questioning why we are just talking about green bond. It's a bit simplistic because it hides a lot of diversity of different situations and impacts. So that's a fair question. But if you remember, this green bond market started when the Paris Agreement decided that all nations should unite to fight against climate change and that we should use financial flows to achieve that objective. And by using a generic term as common as green, we've made that mainstream. So now everybody understands that there are financial flows that are directed to combat climate change. And this is quite a success. But that's a fair remark that it's hiding a diversity of standards and a diversity of issuers. And that's exactly what Juliette said. is to respond to different types of investor demands and different situations at the national, at the regional, or at the international level.
Okay, thank you for that. And I see that as Cedric pointed out, there are a few questions coming in. We'll get a couple in before the end of this theme, but let's stay on this theme for a little while. So Cedric, I think actually my next question is to you. You were once a fund manager yourself, right? So what advice would you give to investors who are trying to navigate through the various standards? I think we touched on that, right? But I think there's still a lot of confusion as to what one standard means for another. Can you comment on that?
Yeah, obviously, investors have different requirements. So if you want to align a portfolio so that the risk of climate change impacting the valuation of your portfolio is reduced, you need to follow the standards that really gives you this assurance. Now, starting with bonds that are issued under the green bond principles is a good start, because there is already a lot of work that has been done to ensure an alignment with this objective. But again, I think all investors should really take notice of this emergence of the green bond market and look at their portfolio and identify which sectors are likely to be more exposed to climate change. We have just had an experiment really with this COVID-19 crisis. The oil price crashed below zero, and the valuation of companies that are linked to the oil price also crashed. Airlines are being bailed out by governments to survive. So we are witnessing an external shock having direct and very sudden impact on the valuation of our investments. And climate change is the same thing. It's going to have impact on the value, for example, of real estate for properties that are on coastlines that may be eroded through the rise of the ocean level, or on the agricultural space, or on the oil, on the coal sector, on the mining sector more generally. So investors need to take note of this change. So your question is, which standards should they follow? So obviously they should start with a more broader one, which are the climate bond principles, the green bond principles. But if they want a more strict definition, when we go to sectors that are more complex in nature, our certification provides scientific-based criteria that allow to align projects to climate change objectives. So that's what we are offering to the market, and that's what the EU Green Bond Standards is going to achieve as well. The development of the EU taxonomy is a huge progress in the development of this market as well.
Okay, so let's go to Yoonmee for a little while. So in your capacity, Yoonmee, working with issuers, which standards do you come across most often?
Right. So I actually agree with Juliet and Cedric in many ways. And I understand that there are some toutings about many different definitions and labelings and standards, whatnot. But from a practitioner perspective, we all use ICMA Green Bond Principle as a starting point. And although it's a bit high level, it really gives a very good starting point. It touches a good necessary points about the use of proceed and internal governance and reporting commitment as well. So we always start from that. And there are many, so let's say for an issuer in Singapore or the ASEAN region, they will start from the ICMA Green Bond Principle. And they will obviously try to follow the ASEAN Green Bond guidelines. And as you may know, they are mostly aligned. The text is almost identical. Then after that, if you want to go further, you can obviously do a certification from Climate Bond Initiative, which I call it as a gold standard. But just in navigating it, for investors and for bankers like us as well, what we do a lot is we actually rely on external reviewers a lot. Because they're the one who's actually helping the investors and the issuers navigate the current thinkings around the guidelines and then the eligibility criteria of certain projects, whatnot. So external reviewer itself also is very diverse, and some people can be also confused as well. But generally what they do, however, whichever form they have, they really help investors see what is the eligibility criteria for the particular projects, and also the internal governance around the bond program. And then they will help investors really navigate this whole different things as well. So when we actually engage the clients for particular deals, I think the internal governance and reporting commitments are fairly straightforward, because ICMA Green Bond principle is very good. And I think there is not much of a question around it. I think what's hard is the eligibility criteria part, meaning like, how do you make sure that this project is green? And that's where I think a lot of us are still working together. CBI standards is absolutely useful, and it's very detailed, and it gives a lot of pointers for data. Again, external reviewers' view is always helpful. We also reference EU guidelines depending on the ones. So, but all in all, that's how we kind of design the product when it comes to the green bond issuance. Yeah.
Okay, thank you, Yoonmee. We've got a few questions coming in, so maybe the panel will like to take a couple of questions live. So we have a question from Jacqueline Law. Hello, Jacqueline. Thank you for your question. And here's what Jacqueline asked. Perhaps would it be right to say that businesses that have already embarked on their sustainability efforts will still continue post-pandemic, while those who aren't might be more focused on survivorship, i.e., for example, small and medium enterprises? Would anyone like to comment on that?
I think businesses will be more aware that they need to provide assurance to their investors that they are doing things to make their business more resilient. And investors will be demanding more and more that management has put in place some contingency plan to address any issues with their business being exposed to external shock, including climate change, but not only, also health issues and social issues as well. So this current state of the market where we are will, I think, reinforce the need for more disclosure and more focus on these issues, even at the SME level, because I think lenders will be asking their borrowers also to comply with the frameworks that they have put in place.
Yeah, I will just add that embarking on your company on a sustainability journey is not a question about the size of your company. Whatever is your size, there's baby step and there's big step to transition to your business toward a more sustainable business. So if you are a large listed company, you will have requirements and regulation and stock exchange asking for doing certain ESG, integrating ESG factors. If you are not listed and a smaller companies, you may not have this regulation to ask you for, but it doesn't prevent you to have a clear sustainable strategy and try to transition your business. And it's recognized more and more by most of the stakeholders. If we are all believing that the green loan markets that is growing a lot in Singapore, for example, sustainability-linked loan market has definitely market that have quite a good prospect and good future growth, is because it does matter to the lenders and it does matter to all stakeholders. So whatever the size, I think, and it's the same for investor actually. It's not because you're a small investor that you shouldn't look at that. Whatever the size of the investor, you have to adapt, of course, and the maturity of your ESG strategy or your ESG engagement will be different, but it's not something that is only for large one.
Oh, well said, Juliette. Thank you, and thank you, Cedric. Maybe one more question.
If I may, okay. just to add on. I think when we say sustainability, I think we tend to have a very narrow definition of what is sustainability. But if you really think about it, sustainability is really making sure that your business is sustainable and having a wider stakeholders in consideration when you make a decision. So when you actually move away from the very narrow definition of the sustainability, I think, and then really having a big picture, having a sustainability angle in your business will help you fare the crisis moments. Actually, it was encouraging to see some of the research coming from the asset managers saying the asset, both fixed income and equity funds, with the higher focus on ESG, has been faring better during this time of crisis. I don't say they outperformed, but they showed better resilience in terms of fund flow and also the performance. I understand this is a bit too early to make a real conclusion, but it's showing that having a better consideration the sustainability issues in a very broadest term helps business to go through this difficult time. So I'm not really discounting the stresses and difficulties that the business, especially the small businesses, are going through at this moment. But I think it's rather a time for us to really push for the sustainability agenda.
Thank you. Actually, I think you touched on a question that was raised by one of our audience, a member of our audience, Muhammad. He's asking whether green bonds are doing much better than other bonds during this COVID-19 period.
I remember seeing a report from Amundi. I think it wasn't a green bond per se. It was a fund with more ESG filters was faring better in Europe. I don't know. I think I don't have a clear conclusion at this moment. Sorry. But to be very honest with you, green bond as a starting point, Cedric, you might not disagree. You might disagree, but green bond is a bond, so it is actually same with conventional bond in many ways. And I think that's why it was such an innovative product, because for investors, they could follow the same investment decision process when they invest in green bonds while having additional transparency in the project that they finance. I understand that there are a number of research coming in to understand the pricing benefit of the bond issuance and also the pricing differences in the secondary market. At this moment, I don't have a very clear, conclusive view. I'll leave it to other panelists.
Yeah, it's very difficult to give a blank statement because the green bond market is different in composition from the global bond market. So there are some reports that the green bond market has outperformed in this crisis, but what is true is that its composition is different. For example, the green bond market has no exposure to the oil sector or to the airline sector, which have done very badly in this crisis, as we know. So that's exactly the point, that by investing in green bonds, you are going into sectors that are more resilient because they are typically financing assets that are long-term in nature, that are for building resilient infrastructure. For example, take green buildings, they will be for low energy buildings and so on. So you will have, as an investor, the comfort that you're less exposed to sectors that are at risk because there are changes going on. For example, in the coal sector, a lot of lenders are excluding coal from lending. So the sector will be at risk of having some liquidity shortage, for example, and so on. So it's very hard to give a blanket answer to whether green bonds outperform, but because of their nature, or because of the types of assets they are financing, in the long run, they will be less at risk of suffering in their market valuation.
Yeah, and I think what has been widely accepted is as well, and that the future of the investor for the green bond is different. And so it's mostly long-term investor because the offer on green bonds is limited. So in a real green bond investor tend to be more buy and hold investor and long-term investor. So there's as well a question on the volatility on the green bond market versus vanilla bond market. And of course, it's reflected by the book building and the oversubscription. Cedric mentioned the case of Iberdrola at the beginning of the call with a 14 times oversubscription despite the current situation.
I see some question about what is the benefit of an issuer for a green bond. And I think that's exactly what Juliette is saying. This interest from investors is very large. So the idea is that you can access more types of investors. For example, Indonesia, when they did their 2 sovereign sukuk, green sukuk, they discovered that they were able to reach 39% more investors than their normal sukuk program. The BTS group in Thailand came out with a green bond to finance some new BTS lines in Bangkok, and the bonds were 8 times oversubscribed. So, and the bond had to be upsized. And that's something that we see more and more. The size of the book building is very strong. And it's a promising omen for other countries that are more challenged in terms of accessing liquidity. For example, Vietnam or Myanmar or even Cambodia in the long run. This is an interesting development for the region, that more access to good liquidity, that means long-term capital that is committed to long-term project, is a good thing for the economic development.
Excellent. So I think on that, I think it's the perfect time to move on to our next theme, which is on the issuers. I know a lot of you work with issuers, and governments in ASEAN have been trying to promote sustainable finance. Now, Singapore is probably one of the most proactive governments in the region, having committed $2 billion to drive sustainability and green finance, providing tax incentives and fee rebates, and mobilizing banks and financial institutions. So, Yoonmee, in your view, are you optimistic that green finance will be widely adopted here?
Yes, and I hope so, given my role in the bank. Yes, I mean, I think Singapore government, you mentioned about the program from the Singapore government. I think they have been very effective in promoting green finance in this region. Also, I think the property sector in Singapore was a real true leader in this green finance development as well. And that's thanks to thanks to the existing standards. We had a very good green building standards in this market, which we could leverage in designing the green bond or green loans. Also, typically the property sector players were having a very good sustainability report with a good data points, which could have been which could be used for sustainability linked loan as well. So I think the property sector has been very strong. To answer your question on whether it's gonna continue, yes. Yes, this leadership from the property sector will continue in the bond market as well. Because typically when you do the green loan, I think you prepare the green finance framework that is really giving a starting point for the bond issuance in the future as well. So many of them has that already. And I think once you have certain transaction and once you know that it's doable, you get more confidence. So we really see more, we expect more activities from property sector. Want to see more activities from utility and transportation sector as well. Yeah. So for example, like I'm a little bit digressing, but for example, we just did a green, earlier this year, we did a green loan with ComfortDelGro to finance the hybrid bus in Australia, for example. And I want to see more of that. And I see a bit of a diversity in the clientele who is interested in sustainable finance transactions.
And Yoonmee, your bank also did a green loan to Myanmar, right?
Yes, so we actually, our clients did the first green loan in Myanmar. Shoten Group has entered into a green loan with us and UOB to finance the green building. And that one, we also leveraged the BCA Green Mark. We actually have done more than 20 green loans and sustainability linked loan last year on loan, and a lot of them were coming from property sector. And so they were really a clear leader in this space.
Okay, yeah. Thank you for that perspective. And at this point, I actually want to launch a poll. So the next poll is about government's role in promoting sustainable finance. As I was saying, Singapore is one of the most proactive governments, but should governments actually have a role? What should they do? Is it nothing? Is it to provide tax and other incentives, or become an active issuer themselves, or give us more new rules, or create a top-down holistic strategy for sustainable finance? What role should government play here? And I'll close a poll in 5 seconds. Thank you. I'm just going to share results. So a lot of you think that tax and other incentives should be provided, followed by creating a top-down holistic strategy for sustainable finance. Interestingly, only 3 people think that we should do nothing, or the government should do nothing. So this is very interesting. I think from all of the news and other developments that we've read, it seems like climate change and sustainable finance is indeed something that a government should be proactive about. So, Juliet, so in the ASEAN, I think you've worked with a lot of financial institutions and sovereigns as issuers. And I think we're seeing a lot of diversification, both in terms of instruments and in terms of the nature of the issuer. So what do you think they would like to see from governments in terms of incentives?
So in the region, as you mentioned, there's already a lot of initiative by different governments, but it's mostly focusing on the issuer part. On the issuer, helping the issuer to push them to issue a green bond. As a market, you need to have demand and offer. So what I guess is probably missing is probably a push for investor, for local Asian investor, to be more vocal and to be more involved in the green bond market. And then, you know, if they've got more incentive to be present and integrate ESG into their investment decision, they will of course push for more issuance and more ESG requirements and best ESG requirements. So of course, providing incentive to issuers to help them to issue green bonds, leading by example by issuing the sovereign issuing sovereign green bonds. It's really a great sign as well to show to companies and private companies in the country that, you know, that they should open the market and lead the market by themselves as well. But I guess we should all focus as well on the offer, on the demand side, which is coming from investor, and see, you know, how we should increase this part. Because what is making a green bond issuance successful, it's of course a lot depending on what the issuer has done, will be financing as well. But it has to what is key. And I will repeat a little bit myself, is like to make it successful. You know, it has been really transparent, and what is communicated to investor has to be really transparent and clear on the sustainable contribution of the green bonds and its objective. So if you don't have these points from the issuers, investor will probably not look at that. So, so it can be challenging for issuers, but this is really key to make the market, to make further issuance successful and to make the market grow. So this can be challenging, of course, for issuers, you know, in terms of how you identify eligible project or assets, how you define them, how you select them, as Yoonmee mentioned earlier, and as well to demonstrate they are able to report on the environmental KPIs during that the project or assets will have, and the environmental benefits. So there's a lot of work to do from issuer side, and then of course it could be as well challenging as when there's a green bond issuance, then you've got a lot of different teams within at the issuer level that has to be involved. Of course, the finance team, because it's a bond, it's financing topic, and there's a sustainable team. Is there a sustainable team? Then the operation and the project level to understand the environmental benefits of the project and to be able to report on that, set up KPIs and regular reporting on that. And then, of course, the top management has to give them, you know, the time, the resources needed to make it happen. So there's all these things that, of course, are challenging for issuers, and if sovereigns or regulators can help on both points, it's great. But again, the demand from investor is as well key to consider.
I personally think that the issuer, the government being an issuer of a green bond is a very strong signal to the market, and it shouldn't be underestimated. We see it in countries where the sovereign is an active issuer of green bonds. There is then a filtering through of the issuance among the financial institutions and then the corporates as well. I think that's very important as well.
Yes, so it's definitely a big signal at the sovereign level about their implication into bringing a sustainability agenda on the top of the agenda of the government itself, and how the government, what are the priorities on sustainability? Is it social, environmental? What are the, in terms of use of proceeds of the, for example, of the sovereign green bond, what the one that they will be prioritized and how they will prioritize them. So there's a lot of signals behind this sovereign green bond issuance.
And the Climate Bonds Initiative is working actively with governments around the world. And what we observe when we do workshop with members of the government is that we put in a room members of the Ministry of Finance, the Ministry of Environment, the Ministry of Transportation, the Ministry of Water, and so on. And they start talking to each other on a common topic. And they start to realize that there are synergies to really identify projects together to combine them into a sovereign issue. And that's something that is relatively new in the way that governments are working. And if you associate to that exercise representative of local governments or municipalities or regional level, you can also include some projects that have more of a regional impact within a country. And I think that's a good exercise to go through as well, because it creates a resilience for the government as a whole.
Excellent. So our final theme of today, and we're pushing up to the hour, but I know that our panelists are prepared to talk a little bit about some of the recent transactions that they've been working on, the critical factors that make or break a deal. And we've also got a few questions from our panel, from our audience about potential role of green bonds in certain sectors, for example, transportation and wind power and renewables. So maybe, Juliette, you can start with talking a little bit about some of the transactions you're seeing around the region.
Yeah, sure. So I will. I think if you about this topic, you need to speak about diversification, because we mentioned sovereign, we mentioned financial institutions, and usually when the financial institutions are even the first one to enter to the green bond market, for simple reasons, they've got a balance sheet and they've got assets to finance that are really diverse. So it's probably easier for them to find right eligible assets to finance the bonds. But what we're seeing now in the region, it's out of this final institution, we've gotten more corporates going to the market, private corporates that are going to the market and are taking the lead on the market. Yoonmee mentioned earlier, in terms of use of proceeds, the green buildings, the clean transportation, and it's true that is the, I will say, the traditional or the most common with renewable energy use of proceeds. But in the last years, we are seeing more and more framework for issuance with wider use of proceeds. So they could, of course, get renewable energy financing and clean transportation financing, but there's more and more focus on some other use of proceeds, such as waste management, water management, and circular economy, and so on. So there's a lot of more of use of proceeds, and all the stakeholders in the sustainable finance market are evolving, because the science is evolving, our knowledge are evolving as well, and to make sure that all these new projects are eligible, the environmental benefits are clear, and it's bringing something new and it's added something. So this is really an evolving market with more and more diversification in terms of use of proceeds and issuers.
Yoonmee, would you like to add to that?
No,
I know that you see as well.
I totally agree that I see a diversification as a huge trend. We see a new market, new countries like Myanmar entering into this market. Also the new sector as well. I keep saying property, but we do see actually an interest coming from the utility sector, transportation sector, and energy efficiency as well. So there are a number, and actually if you look at the ICMA Green Bond Principle, there are roughly 10 different project types. So whichever companies who are investing in those areas are eligible for green financing. If it's not big enough for bond issuance, companies can look into the loan as well, which we always are. So we obviously see more diversification. We want to see more diversification as well.
Yeah, and I think in terms of use of proceeds, to go back to the real estate, even if we have spoken about a lot today, it's just because real estate, especially for this part of Asia, it's a sector that is really high consumer of energy. So if the overall objective is to reduce consumption and reduce air pollution and to achieve some climate goals, of course you will focus first on what is the most polluted or what is the most energy high level in terms of energy consumption. So that's why I guess real estate is coming on the top of ranking.
On the transport side, we see quite a few green bonds that have been issued globally. In our region, the BTS group that I mentioned is the one that has really caught our attention. I think there is great interest to develop more transport infrastructure in the region, as there are many big cities and capital cities that need to be maybe made better for transporting its people. And there is a new capital city that is going to be built in Indonesia as well, that will include some transportation also. There are some projects in Indonesia where some second big cities will also develop their infrastructure in terms of transport. And Climate Bonds Initiative has released for consultation a new criteria on shipping as well, which is also part of transporting goods and merchandises. We hope that through this standard, we will also put the focus on the sector shipping that is representing 2 or 3% of global emissions of carbon. So it's quite a significant sector as well. And sorry, one last word is next week we will have also a discussion in the form of a webinar with the BTS group and also Bombardier, which is an international company producing trains. And we will have a discussion on sustainable transport for cities as well. So hopefully we can address some of the issues that they are facing.
Now, I know we've gone past the hour, but we are having a lot of questions in the back end and in the Q&A chat box. So I think I will call on the panelists to maybe take a couple more before we close. So for those of you who are still with us, thank you. I've got a very interesting question about engagement. Yushuan is asking whether ASEAN investors are practicing engagement with their green bond investees, and how will the recent fintech development change that?
I see we've seen some examples of fintech looking at the reporting on green bonds. As we mentioned, reporting is a big element of the market standards. So companies and issuers have to deal with extra level of information that they need to produce for their investors. So there are some fintechs that are looking at that. Also, there is a number of fintechs that are looking at lending to the non-bank sector through the microfinance. It's more of a longer term thing, but some development in that space about greening these financial flows is something that needs to be developed still. So there's some interesting development there. But I don't know if Juliet or Yoonmee, you've seen other examples of fintech.
Right. I mean, I've been hearing about the fintech being kind of exploring the supporting the consistent environmental impact reporting area as well, because as Cedric said, environmental impact reporting of the bond is a key area of development. And at this moment, many issuers are facing the difficulties in collecting the right data at the right time in a very consistent manner. So using a technology, capturing the real data from the real asset in a more smart way, I've been hearing that development. So I guess generally, as Juliet was highlighting, green bond is a market trying to have better transparency and more organized reporting around where the money goes and what's the environmental impact of those money. So definitely technology has a huge role to play here. And I do want, again, like I keep encouraging these things, but I do want to see more development. But at this moment, is it widely or actively adopted and used? I'm not aware of that. And the questions about the ASEAN investors in engaging green bond issuers in sustainability topics, again, it's really my personal narrow view. At this moment, at least our experience is ASEAN investors are still looking at the credit and financial of the bond, particularly when they actually make an investment decisions. But I think it's an area that we want to see more. And as Juliet was saying, if we really want to promote green bond market in this region, I think we need more vocal support from the investors saying, I will buy green bonds as long as it's competitively priced. And to build on that, I think the government has been doing a good job in promoting green finance in Singapore, but perhaps they can also focus on the incentives for the investors to buy more green bonds.
Like tax breaks.
Oh, everybody likes tax breaks.
Yes. Okay, I think with that, let's close the session here. Thank you for all our speakers who have given up their time to be with us today. Great big thanks to Climate Bonds Initiative who organized the event and who invited CFA Singapore and CFA Institute to be your partners. There are 2 upcoming webinars on the ESG green finance theme. There's a CFA Institute one on June the 9th on comparative studies using alternative ESG data. So I think for those of you who are into data and fintech, this is the one not to miss. The next one, a more imminent one, is an ASEAN webinar on financing options for sustainable transport infrastructure. So Bombardier, which Cedric was talking about, will be one of the speakers, as will be Cedric, and BTS, WWF, and InfoAsia. So please look out for future events. To all of you who have stuck with us to the end and contributed with questions and answered the post, thank you. You've been a wonderful audience. Please check back on the Climate Bonds Initiative website and the CFA Institute ARX website for playback and slides. And we look forward to having you again soon. Thank you.